So the screen share's active, mic is turned on. I guess it's 10 o'clock, so we're ready to go. Just a quick reminder, it is a live webinar broadcast, and so if you have programs open that require your internet bandwidth, it is worth closing them down, and that way you have uninterrupted reception. It is Monday the 16th of March 2015, one of the busiest economic calendars I've seen in a while. On Tuesday, we've already had Draghi speaking this morning, so that's today's calendar done with, but tomorrow we have the Bank of Japan with their monetary policy statement. Wednesday is the busiest day of the week, a lot of important data coming out then. UK claimant count, that's like the UK equivalent of the NFP. So you do get price flying around a lot on that data release. I've seen it happen pretty much every single time for the last 5 years, and so you want to keep an eye on that. We also have a release of the Bank of England voting pattern, the yeas and nays for the interest rate rise in the UK, and if there's a change or a shift in that voting pattern, then that could become a significant event too. On fly, we fly further west to the States, and it's the FOMC with the rate and statement and projections, and as well the FOMC press conference, which happens every few months. Generally speaking, the FOMC statements don't really cause a lot of volatility, but ever since they started with this process of having press conferences, that volatility has kicked up a little bit, and people will be keeping an eye on that. I think they want to know more about the kind of timing that the Fed has planned for raising interest rates in the States, and whether that's going to happen in this half of the year or whether it's going to be happening in the next half of the year. But the general consensus seems to be that this is going to happen pretty soon. And if it's not, then the FOMC needs to start telling us, hey, you know what, despite the fact that everything's going great, we're still concerned about the general state of the world economy, and that we're not going to be doing anything soon, and we're going to let the dollar weaken or whatever it is that they're up to. But regardless of whatever they're thinking from a fundamental perspective, if it's going to cause volatility, then we're interested and we will be following that particular event. If we keep flying west, we'll end up in New Zealand on Wednesday, and they have the release of GDP Q-on-Q figures. Again, tends to be a reasonably volatile affair for the Kiwi crosses. On Thursday, the SNB has their latest rate and statement, and they also have a press conference. And as well, there will be a print of the ECB's targeted LTRO, which is the long-term refinancing operation, which is aka quantitative easing money printing program. So a lot there going on the calendar to be watching out for. We do think it's going to be a volatile affair this week, although considering some of the ranges which prices moved this month, we're becoming inclined towards more corrective moves, but more about that as we cover the charts. All right, we're in the kind of third trading week of March now, and there are two charts that I'm looking at in particular from a trading perspective, which I think will be quite interesting because they do offer clean support resistance perspective, and then there's all the rest. So we'll cover the ones that I'm looking at from a technical perspective first, and then we'll cover the rest of them. So first up is the pound Swissy. We called the short last week after the trend line break, and now that trend line has breached, we think that we chose a good one, right? So we had a trend line break, the price hugged the wall. You can see it hugging the wall just there, and after hugging the wall, she fell down. So I'm quite happy to believe that we've got support resistance against this wall, and I'm quite happy to believe that I'm quite happy to believe that she could correct further. I'm quite happy to believe that she can pull lower and head towards ultimately the 41 price handle. The question just becomes about defining a trigger. So if she heads north and she's testing the underside of that wall, I would like to be shorting the underside. I'll wait for a 15-minute confirmation on that if I'm aggressive, and an hourly confirmation if I want to be a little bit more conservative. It is very possible that the price action could do something like this, and I'm quite happy for it to do that too. And I'll continue to sell the underside of that wall so long as it continues to hold, right? So pound Swissy looking for a short play, sell rallies, retest of the underside of the wall. It doesn't matter if it hits once, twice, or three times. Certainly, if it does go and hit a third time, at that point you could expect a much more significant reaction. So that's the first short trigger that we have on the pound Swissy. It's quite a clean trend wall there, offering a support and resistance play. If it happens that she chooses not to rally as far as that, a H1, H4 breakdown below the weekly open, right? So she just needs to fall below there. I don't know whether that's coming in around the 48 price handle, I'd guess. But a H1, H4 candle closing below the 48 price handle, below that weekly open, and then I would just look for momentum to follow through to the downside with a stop marginally above that H1, H4 candle. And if we're looking to the downside, we would be looking somewhere around here, right? So inside of the 41 price handle, maybe the 42 if you're looking for a double O. So down to 42, just sub 42, 41.72, we've got target to the downside on this particular instrument. So two triggers that we've defined there. The first is the test on the underside of the broken trend wall. The second is just chasing flows. You get your H1, H4 close. It's quite easy to look for follow through to the downside on that, given that particular trigger on this instrument. So that's the pound Swissy covered. The other technical that we have is NZDJPY. So this one, in fact, we were discussing the last time I was here, and general feeling is that we have a very ugly double top here. There is potential that we go and double top there again, right? So we end up with, we end up with something like this before she ends up breaking down. So that'll happen somewhere over here on the right-hand side. There is potential for that. I can't really rule it out right now, but I'm liking to believe that. And last time we were here, what we were talking about was that the price would kind of push up here, stall, would wait for a stall before initiating shorts. The stall didn't happen. She went straight up there and then just collapsed, right? So now I've got technical triggers that would allow me to place shorts. You can see the walls that I've got marked there, and I'm prepared to initiate shorts at both of these walls, right? So there's the first one, and there's the second one. They're all representing resistance to me. So if it happens that she's pushing to the underside of that wall, given a confirmation, I will short it. And if she pushes through it and stops out that trade, I don't mind making another attempt on the underside of the upper wall that I've got there. So there's two walls around the DJPY. We're still very much looking to be initiating shorts on this instrument. I think we have a technical trigger now to be able to do that on rallies, which we didn't really have before. And so I look to utilize those for the short plays. There is a lot of room down on this instrument, and we're potentially looking at a swing setup that could last the whole of the year, maybe even, right? So so that's the name of the game here. We're going to, if she rallies, we're looking for failure, and with a lot of room, a lot of swing potential to the downside. Again, if it happens that she's not planning on pushing as far as that upper wall and she starts collapsing, H4 close below the 89 price handle, and you might look for a close below 87.70. 88.70. So she's at 89.30 right now. H4 close below 88.70. That can become a trigger for shorting the instrument too. Just again looking at the flow in that instance and saying, okay, the weekly flow has turned bearish. Let's see if we can get further follow through to the downside. So again, if she rallies, we're selling it. If she drops, we're selling it. If she rallies, we've got technical resistance to be selling at. And if she drops, we're going to be chasing the monthly and the weekly flow to the downside. If you're taking positions, you can look to be holding them for quite a while. It is going to depend ultimately on how brave you want to be with it. But if she does start falling from here, there could be a heck of a lot of room to the downside on the instrument, so long as these most recent highs have been a 93 hold, right? So there is a little bit of a caveat to that. As long as that double top there holds, then it is worth keeping an open mind to the downside about how far it is exactly that she could move. The key, of course, is going to be using technical triggers and making sure you are getting risk-defined entries for these trades. All right, those are the two which are of particular interest to me this week. Let's move to all of the rest in no particular order. First off is the Euro USD. She's down this month to the tune of 700 odd pips. So you might start expecting at this stage some kind of corrective move. We've got in the most recent price action a form of trendline break going on. And when you have a trendline break, so let's just mark the trend wall first. Here's the trend wall. All right, that's the trend wall, right? So when you have a trend wall, here's a trend line, right? And when you have that, sometimes you get trend line break and the momentum follows through, something like that, all right? So there's the break, and what matters here is the breakout price. When you have a trend line break, there's nothing more important than the breakout price. That breakout price is coming in at the 106 price handle. So so long as she remains below the breakout price, so long as she remains below 106, then from a technical perspective, from a technical point of view, the bears actually remain in charge. But if it happens that she's able to push above that and you get some kind of support structure being created, then at that point you can look for a deeper corrective move to the upside, and that could push with the last resistance being tested, maybe even as high as the 109 price handle. So there is room to the upside here, but the proof of that for the Euro USD is going to be a support structure above the 106 price handle. So long as she remains below the 106, then technically, even though you've had the trend line break, the bears actually remain in charge. My suspicion here is that we're actually going to get some sideways move on the Euro USD. So she's down now this month, 700 odd pips. That's huge. If we're looking at the year, she's down almost 1,600 pips on the year, right? So it wouldn't be strange to get some measure of correction. The issue is she going to rally 1,000 pips from here? If she's going to do that, I'd rather have her rally 800 pips first and then try and catch the last 200 than to be assuming that I would be building some major swing reversal position here before price action has actually provided the proof for that. So my suspicion remains to the downside, and it may just happen that we get some sideways price action forming with deep corrective moves, something like that, and then we're going to get a spike down towards parity, maybe the 101 price handle, and then a jump back up to 105 from that, right? So she may sit here now for a while. We may get some consolidation here for a while. 700 pips this month, it is quite a big move. It's a very, very big move. How much was she planning on doing this month? 1,000, 1,500, 2,000 pips this month? 700 pips is quite a big move for Euro USD. It wouldn't be unusual for her to sit a little bit and to get some consolidation. But the key issue is just not to be assuming that the bear trend is over until you have proof of that and until the price action proves that. right now we still have resistance forming on the chart. And so long as you have resistance forming on the chart, it's a downtrend. And so I don't want to kind of, quite often it happens that you try to be ahead of the curve and you get it right one time and it'll put you into a bad habit, right? So you buy here, she breaks north, and you say, see that? I was able to kind of forecast the end of that, and it'll put you into a bad habit. You do that a few more times, and you'll find you're wrong every single time after that. So the good habit would be just to monitor that structure. If she's going to rally north, let her do that first. And at this stage, I would rather be sitting out of the euro than to be trying to get than trying to be riding any wave on it. I'd rather be sitting back and watching. I think we capitalized on this bear trend enough right from the beginning of the year, right? So we can sit back and relax now. She's paid what she was going to pay us. Let the price action develop. And once we've got some good technicals, we can start looking at re-entry on the pair at that stage. All right, the pound dollar. So you're going to hear something very unusual from me this morning. I'm not really interested in a technical trigger on the pound dollar. I'm more interested in a fundamental trigger on the pound dollar right now. The reason for that being that I've flipped here to a daily time frame and we're going back to events that took place in February 2013. Our last governor, Sir Mervyn King, when the price hit that point there, and I'm talking like right there to the pit, he came out and made a statement and he said something like, that's far enough, So that's gone far enough. And the moment he said it, the price jumped a few hundred pips. It just kind of went bang. And then you saw that moving up there, pullback, and she double bottomed here. And for a whole year, from 2013 through to 2015. So this is like from June 2013 to June 2014. She rallied to the tune of almost 2,500 of pips, right? Just on the back of Mr. King saying that's far enough. Now she's back at those levels, and that has me wondering what kind of valuation the Bank of England is placing on the pound right now, and whether they're going to be happy with her at these levels. You know how I was talking about on the euro, not to get speculative? Well, on the pound, maybe it might pay off to get speculative, right? And if you don't want to be speculative, that's okay too. But it is going to be worth listening in to any interview, any statement coming out from Carney, although I lost all respect for him last year, right? Forget it, is total loser as far as forward guidance is concerned. But any indication that the BOE is not happy with the valuation here, we could well start seeing support rallies and impulsive moves on the pound dollar. If that happens, you're waiting for a bullish day or you're waiting for a bullish week, you take your entry and then just let the flow follow through, right? So if it happens here that we get a bullish day, you could buy and look for a follow through to the upside. Or you get a bullish week, you buy and you look for a follow through to the upside. But it would be helpful, devoid of any support structure, as it happens right now. We don't have any support structure on this pair. So support structure, I could come back in a couple of weeks and the price action is looking like this, and I'd say, hey, look, we've got a support structure here, and therefore we're good to buy against that support structure, using that in order to define our risk. But devoid of that, we don't have that right now. If there is a statement from the Bank of England about the valuation of the pound, maybe start getting excited. Not too much, just a little bit excited. believing that she could actually turn and maybe there's another swing north coming. Um, there are a lot of fundamental concerns with the pound right now, right? So we do have an election coming up in the UK, and again, one of the interesting things about this is that the level on the pound dollar is back to where we were prior to the last election, right? So we just zoom out a little bit, and uh, how much can we fit in here? There's a weekly time frame, right? So, the last election here, 2009, 2000, we were around here somewhere, right, during the last election. So, it's 2010. Um, we're kind of back there. We're kind of back to those levels where we were during the last election. And so just out of interest, just out of interest. But as far as the technicals are concerned, right now she's still falling. Right, you're good in, if you're good, you're just going to be marking a wall like that, and you're going to say, here's the last uh, support, right, which has been breached. And from a technical point, you'd say, well, you know what? So long as she remains below that, yeah, actually she does remain very much bearish, and the bears remain very much in charge. So that's the technical picture. The technical picture, there's no denying that that she's actually breaking down here and that the bears are in control. But the question that we're raising, the issue that we're having, is that at any time, with the Bank of England having expressed concern before at these levels, if they express that again, then maybe we start seeing support rallies in the instrument at that point, and that is something that we want to be prepared for. I think that is that is the key issue there. All right, what else are we looking at? USD JPY. All right, so this is all right. USD JPY wall to wall. This morning I had a heck of a lot of lines on this chart, and I've decided to remove both of them. I've removed about a dozen of them, right? But okay, as far as the yearly flows are concerned on the instrument, the yearly flows are up, and what that would mean ordinarily is that you've got to be looking higher. I like playing shorts on USD JPY, and I think I have defined some fairly reasonable technical triggers that would allow me to do that. So they're not random shorts, but first up, if you mark this particular wall, all right, so the connection points are actually here, and it touches that, and it touches this. All right, so if the price rallies, she's going to be hitting fresh highs by the time she hits that. I'm going to be looking short on the underside of that wall. All right, there is potential when she goes and hits that, she goes through it and does something like that, and that gives you an overthrow and a throwback. All right, so just kind of be aware of that. But I'd be happy to be shorting the underside of that wall, and as a secondary measure, it may also be worth marking. I don't know what we're going to mark. Let's mark something like, let's just mark that, right? If she breaks down, then the breach of the wall becomes a short trigger, and we're going to look for a move towards the 120 price handle in that instance, right? So we're shorting if she rallies, and we're shorting if we get a breach of the support wall, right? That's the kind of plan with USD JPY. But I like short triggers on USD JPY that have paid off reasonably well over the course of the last few months, and we hope that they continue to do so, right? So, all right, that has me having covered most of what I was looking to cover. Maybe there's room on GBP NZD. Or maybe not. Let's have a look. Saeed, have you covered GBP AUD? No, I haven't, man. But just for you, because I'm done. My agenda's done now. right? That's all I'm looking at this week. But GBP AUD, let's have a gander at that. You know, if I haven't covered a pair, the reason I haven't covered it is because I don't have a technical on it, right? But just for you, here we go, right? So GBP AUD, I had a trade call on this. In fact, I think I discussed it the last time we were here and maybe prior to that as well, where we have a downside target on GBP AUD of around about the 189 price handle. That's our downside target. And that downside target remains intact so long as the price doesn't the break the swing high. The issue is that with her having fallen so far, uh, you can't get the risk definition now, right? You can't get the risk definition that would allow you to uh, target the 189 price handle, right? So if we're looking of ways to tighten it up, we just need to find a wall somewhere, right? And that's what I'm gonna endeavor to do. So we can already see some resistance formed. Okay, maybe we're looking at something like this, right? So you mark your wall from the low to the hook, and what I would say is that from a technical perspective, so long as she remains below that wall, right? So your retest that could trigger a short. Look for an hourly confirmation off of it, right? And if she's going to be breaking down, once you've got your H1, H4 close below the 193 handle, you could be chasing close to the downside, right? And that is all I would be looking at on this instrument. I did do a scan of it earlier on today, but from a structural point of view, it just didn't seem significant enough to me to be worth considering over a trade this week. But if I had to be marking something in close proximity to the price, I would be marking something like that, and I would be looking for the wall to hold it. So any retest on the underside, I'd be looking for a short play off of it. If it happened that she broke up through it, that would have me sitting aside. As far as the monthly flows are concerned, right now they're bearish, right? So, looking for a short play, it remains probably the preferred option. Hang up, there's something else here, which I've just spotted on the H4, right? So you have a support block here. All right, there's a support cluster there. If we drop to the hourly, there you go. Wasn't wrong about that. All right, so there's a support cluster there. And again, you know what? See that support, right? So if the price pushes as far as the 95.90 area, maybe 95.80 even, she doesn't have to push to the top of it, but certainly you're talking sub 96, there might be a structural short here inside of this block. There is a structural short there inside of that block where you'd be looking for support to turn resistance. So there you go. There might be something on GBP AUD after all. You're going to have to wait for the price to rally 200 pips first and then fight that rally. All right. So I hope that helps with your war effort. All right. Okay. That's the GBP AUD covered. Okay, folks. If there's no more questions, that's me done. It's been short, sharp, and shrift presentation today. I hope you liked what you heard and you're able to make use of that. If you have time, don't forget to check out my website. It's wmdforex.com. Check out the training program on there. You could be trading $100,000 of my money if you get it right. Thanks to the team at FX Street for providing the platform. And I'll see you back here in a few weeks' time. It'll be the first week of April, the first Monday of April. I'll be back here, and I'll see all you folks then. Cheers, fellas. Bye bye.